What's going on, everybody? My name is Lamont. I've been a full-time trader for about 7 years now, part of the Chart Guys team for about half that time, where I head up our futures room and our swing report. In this video, we will go over some hype sectors, the overall market, and also, of course, hit you with some trade zones, some setups, and of course, check in on what happened throughout the week. So, let's get into it. Okay, so obviously the lead bull in the not obviously but the lead one of our major lead bulls in the overall market has been NVDA for quite some time, been on a tear. Thankfully they had not thankfully but the potential of seeing a bit of a rug pull kind of a situation on the earnings call was certainly diminished, and obviously they used up a little bit of selling power, but no red flags for buyers continue, right? Because remember, we were saying this, right? Even if there was going to be a rug pull from earnings, if they didn't get back under 634.93, then there was really no problem, because this is really the last area where there was any meaningful daily balance. And even if they did crater through 634.93, like we were saying, very similar to SMCI, this could come back on that week. We can come all the way back down here, another 30%, and this would be okay structurally. So now that there's even more space, it's like 37%. Basically, as long as we're holding over here, bigger picture, these buyers have really nothing to worry about. And so now in the short term, there's space for another daily high low to be set. Anything over 662.48 is going to be good for one. And the best case scenario from these buyers now would be to hold over here. This is pretty much now the daily no change level. This is now some meaningful daily balance, some meaningful sideways. You'll notice that the low of the day on this session on the gap up was essentially just backtesting 746.11 and holding over it. So even though this was notable selling, whatever, it doesn't really mean much right now. If you can't get price under 746.11 next week, if you can't fill this gap, these buyers are very comfortable. If you incomplete gap fill and pop back over 746.11, that should be a test of the whatever local highs are set, when that happens. So again, that would be like this. If you fall right from here, incomplete fill, pop back above 746.11, they should try to come back and test these local highs. First place they'll have some potential problems is like 777. Okay, so we shall see. That would mean that this. Do we have a trade zone here? Oh no, that one was. I think it was stopped out. What? Yeah. So that one was here. It came into the trade zone, got to the target, and then if you were still in one, well then obviously you stopped out, right? You probably stopped out there, no later than here. I probably could have expanded that for the next week, but slipped my mind, so apologies. Now though, if you're looking for a setup into the next week, looking for a daily high or low, then something like this is pretty reasonable. High volume area, high volume area. I probably wouldn't take this middle fill in here. I don't love that one. Probably look for a play here, look for a play here, and then something like this, right? Because if you do hold that and get back over it, something like this makes a lot of sense, right? It's not 1R though, so not a situation where you want to just blindly scale. I mean, I don't like blindly scaling at all, but basically you can look for a play here, look for a play here. But bigger picture, this kind of a setup is pretty reasonable. Honestly, if you get back over there, aiming for that high volume area is not a bad idea. So you could argue it's decent RR. But that is pretty much it. Like if you want to be a bit more tight on that, that would make sense too. Something like this. This is totally reasonable, right? Because if you were to come through this area of volume meaningfully, you're probably coming down here. So, and the odds of you then returning back over this guy and seeing follow through over are diminished. So, I guess all things considered, I guess this is a pretty reasonable trade zone. Doing it like this, looking for that daily high or low, is pretty reasonable. Maybe give yourself a. Nah, like that. It's fine. Again, more conservative. You're coming in here. You're coming in here. Okay. All right. So for SMCI, I think what NVDA does, I think what SMCI does, excuse me, might have implications on for what NVDA will do. So I think, if because this has been on such a tear, I think if you technically the daily lower has already been set at 1003.54 with this break lower, but like I said, if there's no complete gap fill and then you make a new high, that would be a pretty good look for these buyers. That would be fine for them defensively if they don't fill the gap, and then obviously a new high is them going on offense. So Yeah, I would say this is a wait and see, honestly. For NVDA, it's a little bit more clear because now you have space for that higher low. For SMCI, I think it's a wait and see, or you're being, if you want to be an aggressive buyer, you're looking for bottom fishes down here. But I'm not really trading SMCI. I'm just looking at it as more of a bellwether for like whether or not this, hype train is starting to pause or whatever. So yeah, I think I would prefer to do the NVDA if anything and just leave this one alone. But if you were going to do something, it would be like bottom fishing off of this, right? Because here is the last like area where there's just 3 days of balance. This low is pretty much made right off of it. So, conservative, something like this. It's too much range though, to scale in. So I would have to look for just, plays on the day. So this would be a situation where it would be like, I would like to see this move come down, break this structure, right? Come into this low volume area, don't see follow through, move back over this area here. Okay, buy there, stop under here, and then try to come back to this high over here. So something like this, I think would be very reasonable. Again, I don't do these trade zones to say, hey, listen, just scale into it. I provide these for you to say, hey, listen, this is a very reasonable framework for the trade. And again, it's fine if you want to do that. I did that for a long time. I just scaled into these trade zones just like this for different reasons, though. Usually, my setups were different then. But my point is that your hit rate is greatly improved if instead of just coming in on the left side of the V, so to speak, then taking your tactics and shifting them to the right side of the V is much more positive expected value. So I prefer to do that, right? So then inherently you're not scaling into the weakness. You would be looking for that weakness to stall, looking for some turnaround, making those plays there. Pretty much, well, if you're a subscriber, pretty much what I'm doing, what you've seen me do many times in like MDLZ, MNST recently, whatever. It's always the same. I'm always looking for those plays after prices come into the trade zone. And then once price is trying to leave the trade zone, that's when we get interested. So that being said, if you're a scaling approach, I do think these trade zones are very reasonable. All right, so for Bitcoin is still very healthy. Remember, the daily no change level is 43872.99. Lots of room for these buyers to work with to defend against that happening. You'll notice this is another lower low here that did not see follow through down to just this breakout point. If you zoom into the 4-hour time frame here, right, this is the last area of 4-hour balance. Then you break out, and so far the sellers have not even been able to come back down to here. So the buyers are still very comfortable in Bitcoin here. And if they do break down from here, again, this 43872.99, that is the key area. So, a conservative trade zone from here, something like this makes a lot of sense. Trying to get all the way back up here. This makes a lot of sense, right? Because again, if you don't come back into here, then they sell this grade, no change. If you can't get back under this point of control, 46979.22, which is exactly what what shut down buyers over here, essentially that's this guy, right? So holding over back test of this guy should have them trying to come here, right? Because that's the next area of supply, right? So you put that all together, reasonable trade zone like this. But this is right now, it's like a daily bull flag. So a more aggressive buyer is looking for like, if you break down under here, don't see follow through, don't come into under this value area high with much acceptance, or you fail to get to the point of control, move back over it. Okay, there's a buy there. Even this is a reasonable buy. Throw a stop under the low, chop it up at the highs of this range, and then again, look to get here for the rest. Okay. Moving on to Ethereum. So Ethereum, I don't remember, is this from last week? I don't think so. I think this is from a member who asked. So in a short term, I think this is a pretty aggressive trade zone. Bigger picture, I still think this is a very appropriate trade zone, this guy over here. Now, again, it looks like a daily bull flag. These buyers really have no red flags right now. They're looking totally fine, potentially a bull flag. Daily higher low is technically set here at 2868.32, and these sellers will create no change without getting back under 2391.91. This is the last area where there is balance. I guess you could argue that this little flag over here. So let's move it to there. So you'll notice that this low was pretty much a perfect backtest of this high over here. So these buyers are still just stepping up. Very constructive look. Aggressive trade zone like this, I think, is very reasonable. Essentially, that would be a play for lack of acceptance under this value area high. And then this for a larger trade zone, I think, again, very reasonable. This would be for a weekly higher low. Yeah, next big trade zone would be for a potential weekly higher low. Okay, so pick your poison, whatever you like. I think both are very reasonable. CCJ, so CCJ, if you took that setup from last week that we described, then you should be sitting pretty, right? That was a session to session setup like this. Remember, the idea was if you don't hold over the point of control, you can sell that move under the point of control, throw your stop over the high of the day, and try to get to this local low first. That's a 2.3R multiple trade. And if these sellers continue to press the issue, they should be trying to come down there at 38.87. That's the major point of control backtest of this structure over here. Okay, I maintain that should be where they're trying to get to, and you got another setup. That same exact setup occurred for you on this day, the Friday, because it's the same idea, right? That setup made sense on this day because this is the Friday's close, and so this is potentially going to be the daily lower high. If that's going to be the daily lower high, these sellers need to keep price under the point of control on Tuesday. Here's Tuesday's session. They had to keep price under the point of control of Friday, it's this day, to have confidence in this being the lower high. And obviously we had to break the low of Friday. That happened again here. Now this day happened to be the potential new lower high for 2.61, right? And so on Friday, you do the same exact thing, right? If you cannot hold over the point of control, you sell it, throw your stop over the high of the move, right? If you did it here, then you get stopped out, fine. But if they can't hold it over it, you do it again. And the second attempt pays you well, right? See, because the context is still the same. No acceptance over the point of control. If they break over the POC but can't get to the value area high, then the buyers are weak. You roll back down under the POC or no later than the open, you can sell it again. All right. I guess after you get stopped out, the more conservative sell will be at the open. So your risk on the second attempt would be like 1%. The risk on the first attempt is like nothing. So because the risk on the first attempt is like nothing, you should have no problem firing away the second attempt, right? Because unless you oversize for that first attempt, then I guess not. Anyway, that should be where these sellers are trying to get to through 8.87. That is it. All right, so TAN coming into our hypothetical trade zone, and this again is just a back test off of this really major point of control over here. So if these sellers cannot crack that point of control, then they should be trying to come back over here. They should be trying to come up here if they can clear the value area high. So I think this is still a very reasonable trade zone. Hourly time frame is starting to get kind of extended. If you wanted to wait, I would be, if you're a scale-in type, you'd be a little bit patient, wait for like RSI to get beat up a little bit on the daily time frame as well. That'll probably improve the odds of this of a bounce play coming out of our trade zone. But I stand by these trade zones. I think they make a lot of sense just based off of the point of control back test here. And that is it. All right, you're just looking for balance right now, right? So far, all of this price action here has been dictated by this guy and this guy. Right? So as long as we don't trade through this point of control, we should expect more balance between these two structures. So far, both of these structures have not seen their point of controls be backtested. Failed here, failed here. So if that continues to persist, then we should just see more balance. That's it. Moving on to MSOs. So MSOs, this trade zone was shared with you guys last week as well, right? Or was it 2 weeks ago? I forget. 2 weeks ago. And so I think 2 weeks last week. 1, 2, 3, 4, 5. It's not drawn right. Usually I draw it right when the trade is possible. So I think it was last week. No, it was 2 weeks ago. Yeah, it was 2 weeks ago. Anyway, so this guy over here, and you can just check the last video or 2 weeks ago. This setup was shared because remember, these are the two key structures. We've been talking about this a lot in the chat room. This guy is the gateway for all of this. This guy is the gateway for all of this. And so the best case scenario for these buyers would have been to hold over this. But even if they did fall under it, as long as they're holding over this guy, they're not coming in here. So you'll notice that the low of this move so far failed to touch the point of control of this key structure. And so now they're making their way back over this key structure. So the more acceptance that they get, and you notice the high of the day and the high of the move right now is made pretty much right off of the value area high of that key structure that we're talking about, right? And so again, the market is telling you which structures are important. It's always telling you where there is meaningful balance in the past, and that's how we trade with volume profile, and that's how we get it done in the swim report. It's a very straightforward way, in my opinion. There's not a lot of room for subjectivity, so I like that. Anyway, at this point now, if you did take this trade zone, you should have a middle fill somewhere. You should have an average fill somewhere over here. So you're already looking at 10% gains, right? If you didn't chop it up by now, I think you're being kind of greedy. I think you want to wait no later than 9.78 to take some of your position off. If you do take some of your position off, you can just throw your stop under here. and then see what the market will give you. If they do see higher highs from here, they should be trying to come here next 10.55. And that is pretty much it. Lots of space for a daily higher low to be set. Anything over 8.62 will be good for one. And that's it. If we do happen to fail, the buyers fail to come over 9.78, then it's right back to looking at this guy. Okay? So even though this is a pretty nice bounce, you still just are... Actually, you don't really have that much space for a weekly lower high. So honestly, this looks pretty good. It's just a matter of will they get rejected from 9.78? That's going to be super key in the week to come. All right. So moving on to the old boring update for the overall market, and that is, let's see, we have this guy, right? So we missed that trade zone, no problem. So now there's a new daily no change level. Right now this is sideways breakout, right? An inability to get back into this prior high was notable. And so now this is the new daily no change level, right? And you'll notice the low of the day was pretty much made right off of the back test of it. So as long as this gap is here and the sellers cannot fill it, the buyers will be positioned well. It just turned more orange, right? I think my screen's just, turned into like the night mode or whatever. Like it checked your eyes, less blue light. Now I'm jaundiced. Anyway, so space for a daily high low to be set. Anything over 493.56 will be good for one. And now you can just move this whole trade zone up. Right? Something like this. Makes a lot of sense. Looking for that higher low, looking for incomplete gap fill. Oops. Something like this, I think makes a lot of sense. Looking for that potential daily higher low. Okay. Moving on to the Qs. So the QQQs, all right, hypothetical trade zone worked out pretty well for you. One bounce here, another bounce here. So I'm telling you, this is how markets work. Is it going to work every time? No. Am I going to get it right every time? No. Are you going to get it right every time? No. Nobody gets it right every time, right? But what you do need is a standardized process that you can repeat over and over and over again. This is a good one, right? Because, again, nothing is derivative here. The market is telling you which one of these structures are important. We're making all of our decisions based on market-generated information, right? So, anyway, daily lower high, lower low, no follow through. Key support is now 421.63. Anything over 421.63 is going to be good for a daily higher low. And honestly, with the way that the Qs are, I wouldn't touch this. I would just keep looking for plays just like this, because as of right now, higher high, no follow through. Like if you bought in, chopped it up, stopped it out, or initiated the whatever you chopped up on this move, and then chopped it up again here at the target, you are sitting very pretty, right? This was a very clear trade zone. And so that being said, this is not a lot of follow through on it, right? It's a little bit different than SPY. SPY broke out and held this guy. So I would just keep looking at bottom fish off of these lows. In fact, if you pop and drop here, I would expect the lows of the range to be tested. So in fact, I would actually adjust this, right? And like if you pop and drop here, let's look for it down here instead and be safer, because we might be looking at balance like this. You know what I mean? So I'm going to close this guy out. And, just look at potentially this kind of a play, essentially an expanding range. Because if you essentially you lower load here with no follow through, and then you higher high, right? And there was follow through, but you come back down, test these lows, higher high, no follow through. If you don't see follow through on this, you should expect more balance like this. So I would just be looking down here. Okay. The Dow is looking good as well, right? New all-time high breakout. So we would just be moving this whole trade zone to something like this is pretty reasonable. Space for a daily higher low, anything over 383.32 will be good for one. That's it. This is now the new key structure here. Just like that. So I guess we can move this up a bit. Something like this makes a lot of sense. Okay. Space for high low over 383.32. And that is it. Moving on to IWM. So IWM is in a very questionable spot. This remains the key test right here, right? Because if you crack this, then we're coming into here, right? And so the more acceptance that you find over 199.26, the more likely we are to come test 205.46. Acceptance over 205.46 would be very notable. That has not happened in a long time. We have not seen acceptance over 205.46 since March of 2022. That's almost 2 years ago. Okay, so that's all I'm looking out for. Now, that being said, This is a good look right now. Defensively for the buyers, do not find acceptance under the point of control, to not come to the value area low. That is a good look. However, this session on Friday, spending most of it over the point of control and not advancing so well, it's kind of a red flag, because there is also space for a daily lower high to be set under 204.77. So if the sellers then break this low on Monday, 198.57, that would be them setting a daily lower high, and we should look right back down to another test of 194.84. So tough to say how it's going to go. I actually do have a runaround for this. I've made a day trade on this day, and then I'm holding it and I want to see if we can get here. So we shall see. Daily higher low set at 196.39, but not that much space to work with to set another one. So really, I don't even really care about the trend right here, because this is all a hot mess. It's very messy here. So really what I care about is acceptance over 199.26. As long as there's acceptance over 199.26, they should be trying to come up here. Okay, so that is it. The dollar, this is hypothetical trade zone, right? Comes into it again, comes out of it. You can chop it up as well, right? Because this is the high volume area. So if you initiate in here, chop it up over here, throw your stop under the low, that's very reasonable. As long as this structure is acting as support, then these buyers should be trying to come back up here, 104.745. Technically had a daily lower high and lower low, but not much follow through right now. And obviously you have lower wicks of buying, so you're still finding demand out of this zone. So we shall see. Bigger picture, still watching this guy and this guy. All of this price action has been dictated by these two structures. And so if you continue to hold sideways higher, that should be the next reasonable location. All right. And then finally the VIX. So the VIX, interesting that it moved down, right? Because there was selling on Friday. And so you would expect the VIX to move higher. So that's notable. We'll continue to look out for clues in the VIX if it, doesn't behave as you would expect, if there's a lot of fear entering the market. I think it's like probably just the idea, with the VIX not really moving with the market, is I just don't think there's that much fear yet in the market overall. Like, again, Friday we did see selling, but structurally it didn't really create much change. So that's it. That is it, my friends. So if you made it this far, we really appreciate you checking us out. If you wouldn't mind giving us a like and subscribe, that would help us out a lot. And if you want ideas sent to your mailbox, regular ideas sent to your inbox every week, at least 2 fresh ideas every single week. If you would like to get regular updates about any ideas and live updates for trades that we take, then give us a shot. Link is in the description below. Otherwise, I appreciate you tuning in. Thank you for sharing some of your time and energy with me, and I hope to see y'all soon. Farewell.